Hi everyone, FinanceFeeds is here at the IFX EXPO International in sunny Limassol, Cyprus. I'm joined now by Roman Garanin, who is founder and CEO of Yourfintech. Roman, thanks for joining me today and taking the time to speak with me.
Thanks for having me, Nikolai.
Absolutely, great to see you again.
Great to see you too.
So I wanted to ask, Yourfintech helps brokers and crypto exchanges to increase their revenue and optimize their liquidity and infrastructure costs. Can you provide examples of, let's say, suboptimal revenue and liquidity that you encounter in this business and the solutions that you provide?
Yeah, well, what we see on the market is basically lots of brokerages in the market now. They are sales driven. They are always trying to get the best conditions for their clients, for their partners, and so on, pursuing the highest rebates, the highest leverage, the lowest spreads, and the best bonus terms and conditions, and eventually not knowing how this results in the end revenue. And eventually, a lot of our clients, they face the situation when they got clients, they got deposits, but eventually they lack the revenue that they are supposed to have. And that's the reason why majority of the brokers, of the newcomers, they actually fall out of the market within the first 6 to 12 months.
You know, your expertise, having built dozens of fintech startups and products from scratch, I think is an invaluable feature offered by Yourfintech. I was wondering, can you tell us how you price your services and how can brokers know it will be a good investment for them beforehand, before they make a decision?
Yeah, actually, I would like to start with the fact that we offer our services to established companies as well as startups. Let's start with the established companies that are already there on the market. They already have some flow. In these cases, basically what we are focusing on is to evaluate the current setups that they have, including terms and conditions, including trading terms, including the cost of liquidity that they have. And we find we use our checklist of around 15 key metrics of the revenue composition component. And what we do eventually is we find those metrics and those areas where we actually can contribute to the revenue based on the current flow without attracting new clientele, basically. So, and in average, I would say that we managed to save around 40% for the current clients in terms of the extra added revenue on the current flow without compromising the product quality for the client. So this is the first segment of our clients who are established brokers. The second segment is basically a startup that is entering the market, and those clients are typically lack understanding of the costs of running the business. And actually, they enter the market with very high prices for the technology, very high prices for the liquidity, and actually without understanding how these prices affect the revenues at the end of the day. So what we are doing here is we don't just provide the technology itself, we provide as well our expertise in terms of the brokerage math, in terms of how to give to your client the product that will be attractive for him, but at the same time, it will be contributing to your revenue, and you are not basically working for nothing within your startup period, which is the most sensitive for the broker.
I was wondering, can you provide insights into Yourfintech's technology packages and sort of the target markets for those packages and those services?
Yeah, and actually, I would like to just contribute to the previous question of yours about the different packages that we have and how do you price that. So basically, Yourfintech provides technology and expertise, and we provide separately risk management, separately technologies, and we also provide our turnkey solution, which includes both. So basically, unlike other technology providers, we don't just give you the tools, we help you to achieve the result that you are aiming for. So basically, we have three, and now coming to your question about the packages. Actually, we have three different packages which basically are suitable for three different segments of the brokers and startups. So the first one is basically based on higher fixed fee and lower dollar per million cost. The second is basically a balance between the fixed fee and the revenue per million, and we actually even started providing the service based on the partnership relations, where we can actually give the technology for free and even the expertise for free, but we take higher dollar per million fees. Mm-hmm. So basically, we're trying to accommodate all kinds of brokers and basically give to those who are planning to enter the market, but they don't have huge budgets. We actually help them to optimize the cost of the entry to the industry. And actually, we even help them to avoid those typical mistakes that are already being done by us and by our clients in the past. So basically the entry to the market will be as smooth as possible.
Great. I would say that you've been critical of some liquidity providers' eagerness to accommodate like any request, and you've urged brokers to assess like LPs' business models to ensure their promises don't compromise the quality of service, or, for example, lead to undesired outcomes. Why is this so important for brokers, do you think?
Look, I would say that in general, every cost that you bear in the beginning of your business journey in the brokerage business is critical for you. So basically, and the liquidity cost is one of the most important factors here. So basically my point is that it's very important, like everybody is trying to get as cheap deal as possible in the market, right? And that can be a trap of most of the brokers entering the market when the liquidity provider is basically giving you everything you ask for. But eventually, every business is working for money, it's not a non-profit organization, right? So we need to understand the core of the business. So if you are getting the cheapest spreads, the highest leverages, and basically even the bonus terms and the revenue shares and everything you are getting, and basically a lot of offers are too good to be true. And what we need to understand is that the liquidity provider is there to make money on you. And if you are not clear how they will monetize you as a customer, then there should be something that you don't actually know, and you don't even expect that. So the point here is that you need to be always clear in the business relations who and how basically generates the revenues. So basically, if we see a liquidity provider that's giving away everything, you will be 100% sure that some of the terms will change in the course of your relations. And in order not to do that, you need to be always very clear with every liquidity provider that you're acting with. So that's why basically I'm criticizing the essence of current liquidity provider in flow. With basically what I see is that even the retail brokers are not growing with the pace that the liquidity providers are growing. So this makes me confident about the fact that most of those liquidity providers, they don't even actually evaluate the maths from the very first stage. So basically they just try to onboard you with all the means.
Yep.
And basically then you will get all the surprises that are going to come.
Also, you've previously said that the essence of risk management and dealing lies in basic mathematics, which I think is a great point. To those brokers who want to take matters into their own hands, can you specify what kinds of maths we're dealing with?
Yeah, it was my great surprise when I've been speaking to many brokers and many even risk managers, and they just try to give the best terms and the best trading conditions, the lowest spreads, swap-free accounts, highest leverages again, the very high rebates for the partners, and actually they expect the revenue to come. So what they get at the end of the day, they get deposits, they get clients coming in, but they don't get any revenues in the midterm, I would say. The reason for that is that the revenue of the brokerage company is typically contributed by spreads, swaps, and commissions that has been charged from the trading flow that you basically process. And if you drop those commissions to minimums, if you give away the bonuses that harm basically your brokerage, and if you give the highest rebates, eventually you end up with zero expected revenue. I'm pretty shocked by the fact that no one actually calculates that. I'm speaking to the many representatives of brokers, and majority of them, they don't even know the turnover that they are making. But okay, turnover is something that is lying on the surface. But there is other factor, is how much you make per million and how your P&L is constructed. What is the percentage of the spreads? What is the percentage of the swaps? What is the percentage of the commissions and all the other costs? Basically, no one is paying attention to this. And no one actually, not no one, majority of the players, they don't really attend to this point. And eventually they end up with attracting traffic, getting big sales team, getting a lot of partners. And at the end of the day, after 3, 4, 5, 6 months, they just realize the delay effect of this ignorance, I would say. And this is the main contributor, I believe, to the fact that there is a very high churn rate of the forex broker startups and also the trading firms, which are actually a big player in the financial industry in general.
Yeah, definitely makes a lot of sense, and it's kudos to you for thinking about all of this way. I haven't heard these perspectives really from anyone else in the industry so far, so it's definitely a very interesting take and approach on this. Roman, I wanted to thank you for taking the time to speak with us. I know that you're busy, a busy 2-day conference, but it's always a pleasure to see you, get your insights, and all the best to you and to Yourfintech throughout 2024.
Thanks a lot, Nikolai. It was my pleasure, and I wish you all the best as well.
Thank you very much. See you.
Thank you.
Thanks.